London-headquartered Vedanta Resources Limited, the parent company of Mumbai-listed mining giant Vedanta Limited, has been trying to assuage the concerns of investors around its debts for a while now. And the investors' anxiety grew manifold after the turmoil in Adani Group, which many experts believed was over-leveraged. In a recent interview given to a business daily, Vedanta Resource Limited chairman Anil Agarwal said that his company was very comfortable and that there have been disproportionate talks about its debts. The 69-year-old billionaire added that the company is well positioned to meet its debt obligations and the concern around being over-leveraged was misplaced. The company has said this week that it has paid all its maturing loans and bonds due in April, and with it, the conglomerate claimed to have reduced its gross debt by a further $1 billion. With this, the company's gross debt has now fallen to $6.8 billion, down from $7.8 billion as of March end. The company said in a statement that the debt was lower by $2.9 billion from $9.7 billion recorded as of March end 2022. On March 28th, Vedanta Resources announced its fifth interim dividend of 20.50 rupees per equity share. This amounts to a total of 7,621 crore rupees. But Vedanta Resources has annual debt maturities of about $3 billion each in FY24 and FY25, and it has high near-term maturities of $1.7 billion in the first quarter of FY24. And according to CRISIL Ratings, the company was in talks with the lenders to refinance the upcoming maturities of Q1 FY24. Vedanta Resources has also been trying to raise funds from other sources. Its effort to sell its zinc units in Africa to Hindustan Zinc Limited failed after the Indian government, which owns 29.54% stake, raised a red flag. Vedanta was expecting to raise $2.98 billion through it. The company holds a 64.92% equity share of Hindustan Zinc. According to reports, the government believes that the deal will undermine its efforts to realize maximum value from a planned sale of a part of its stake. Reports also suggest that the government is also not interested in a cashless method for acquiring Vedanta Resources zinc units in Africa. The bond prices of Vedanta Resources were also going down over a period of time, causing a cash flow mismatch.
Whatever liquidity was available, they have taken out as much as possible. And now if you look at the commodities market, whether it's metals or oil, I mean, they had a very good run till March 2022. In fact, last quarter of FY22 was probably the best. And since then, we have seen a downswing. So, I mean, although it's not alarming, but the situation is not very comfortable as such. And to top all this, they have announced some mega projects. Among them, you have the Foxconn Vedanta chip JV, where again they're talking of revenue by FY27, which means a decently large amount of cash flow is required more or less immediately for the capex. Again, the question is where will all this come from? So I believe there would be some difficult decisions to take, whether it will cost them in terms of the existing business growth or the new ones. I think only time will tell.
Adding to that, Vedanta has been proceeding with their ambitious semiconductor manufacturing joint venture in Gujarat with Taiwan's Foxconn. The $20 billion project needs $5 billion in the first phase, and to that, Vedanta will be contributing $1.5 to $2 billion. Vedanta Limited has pledged 2.44% shares of Hindustan Zinc Limited as a collateral to avail term loan of 1,500 crore rupees. Another promoter of Vedanta Limited, Vedanta Netherlands Investments (BV), has trimmed its Vedanta Limited stocks worth 1,600 crore rupees. Market analyst Amrish Baliga says the challenge for Vedanta Group will be raising funds at a decent cost.
I don't think it's a problem raising funds, but raising funds at a decent cost, I think that's a question mark which we'll have to see. Because the cash cows of this group like Hindustan Zinc and the listed Vedanta have been milked completely. And I mean, how they bridged the balance gap has to be seen. But then, if you, look at, go back the last 2, 3 decades, and if one has tracked the promoter of the Vedanta group, I think this is not the first time that they have been in a tight spot. They have the knack of overcoming challenges, and again, there's a hope this time too that they would be able to wade through that. However, till then, I think investors will be a bit wary, and there could be pressure on the stock.
Meanwhile, Hindustan Zinc has now turned from a debt-free company to an indebted one in FY23 for the first time in more than 2 decades. The country's top zinc and silver producer gave away all its accumulated cash reserves through a special dividend last fiscal. So the question is, will HZL continue to be the cash cow of Vedanta Group? In the long run, ensuring a smooth liquidity flow for the upcoming cash incentive projects will indeed be a challenge for the conglomerate.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.